Great, everyone. Good evening. Today is Monday, October 26th, and let's run through the market news of the day. To kick things off, we saw a huge fall in equity markets across the board. This was an absolutely brutal day as Pelosi and Mnuchin failed to reach a stimulus deal. The Nasdaq was down over 3% and the Dow was down about 650 points. There was particular weakness in energy and technology sectors, with oil settling at the lowest mark in 3 weeks. December WTI was down 1.29, $1.29, which is the equivalent of a 3.2% fall. This was to a $38.56 settlement in the New York session. XLE, the energy ETF, fell about 3%, with Apache down 6.3% and Marathon leading the way, down 6.3% as well. And gold was modestly higher, up about 3 basis points to 1905 and 70 cents. And the dollar index was also up about 30 basis points. Asian stocks are currently falling with those stateside, and treasuries did gain in their New York session, the most in weeks as investor optimism continues to fall. The 10-year rate fell as much as 5 basis points to 79 basis points. And long end debt performed the best, with the demand for the 30-year bond pushing down its yield by as much as 6 basis points to 158. So the yield curve, the difference between the 30-year and 5-year yields, fell to 123 basis points. So we see this big flattening tone in the markets. However, we do see a continued outperformance of long-dated TIPS ETFs, so this is 15 years and further out, with BlackRock supporting the reflation trade by downgrading treasuries but upgrading their inflation-based peers, the TIPS. All right, to move on here, SAP warns about software earnings with a dire forecast and fell over 23%. So falling in Europe led to a bad start in New York. This was the biggest one-day fall in the stock ever. So this brought the stock's technology index down about 7.6%. We saw Salesforce fall about 4.1% in the New York session, and Oracle, SAP's main rival, falling about 4% in New York. Salesforce in August reported impressive revenue, climbing about 30% to 5.15 billion US dollars in this previous quarter, and did decide to raise its revenue projections for the rest of the year. SAP clients are apparently reconsidering signing large contracts to update their software, given the shift to cloud technologies instead. Because of this move to cloud services, software licenses do continue to trend lower from 2020 levels, and this has led to SAP performing worse than some of its peers, which have further developed their cloud computing capabilities. All right, so let's talk about stories. I've got 5 things I want to talk about today. Firstly, on the top left, Dunkin' Donuts is trading at an all-time high. This follows buyout talks. They were in preliminary discussions this morning with Inspire Brands. This company also owns Arby's, Jimmy John's sandwiches, Buffalo Wild Wings, and Sonic Burgers. So a lot of fast food companies. However, Inspire is also owned by Rourke Capital Group, which is a private equity firm based out of Atlanta, Georgia. They also own Focus Brands, which owns Auntie Anne's Pretzels and Cinnabons, and they also own CKE Restaurants, which owns Carl's Jr. and Hardee's, the burger chains in the US. However, despite this impressive portfolio, Rourke Capital has no spot in the breakfast category, and Dunkin' Donuts, the parent company of both Dunkin' Donuts and Baskin-Robbins, could provide an amazing addition. Dunkin' Donuts has annual sales of more than $14 billion, and shares jumped $14.31 on the news, or about 16.1%, to close today at 103.10. So Dunkin', again, does have both Dunkin' Donuts and Baskin-Robbins brands. They have 13,000 Dunkin' stores and 8,000 Baskin-Robbins, obviously across the entire globe. Dunkin' brands reported revenue falling about 20% in the second quarter as franchisees closed about 200 restaurants, given the COVID situation and the dire consequences there. They reported full year sales of $1.4 billion in 2019, which was up about 4% from the previous year. All right, moving on to the next story. Let's talk about Ant Group. They are doing a huge dual listing. This is across Shanghai with the star index there and also in Hong Kong. So this will be 34.4 billion US dollars for the IPO, which will be equated to 17.2 billion in Shanghai and 17.2 billion in Hong Kong. This is the fast growing fintech giant we've spoken about a couple times here. And it'll be the first dual listing between these two exchanges. This will value Ant Financial at 312 billion US dollars and will also include something called a green shoe option, which is for a 15% over allotment of shares. Ant is worth more than the Industrial and Commercial Bank of China, which is the world's largest bank by assets. The money raised will also shatter the record set by Saudi Aramco just a couple months ago in December 2019, also known as the Saudi Arabian Oil Company. They did a $30 billion, $29.4 billion to be exact, IPO in December. The order books on the Hong Kong offering to institutional investors were oversubscribed apparently just a single hour following the launch, and the group has earmarked about 80% of the domestic offering in Shanghai to 29 strategic investors that will be locked up for at least 1 year. So this includes the wholly owned unit of Alibaba. Obviously, do note that Ant Financial and Alibaba do have close ties, as both of them are founded by Jack Ma and Alibaba actually owns a lot of Ant Group as well. So they agreed to purchase about 44% of Shanghai's float, and other strategic investors include big names in the space like Temasek, GIC, the Abu Dhabi Sovereign Wealth Fund, the Abu Dhabi Investment Authority, and the Social Security Fund out in Singapore. So this will start trading in Hong Kong and Shanghai on November 5th, which will be 2 days after the US election. The Shanghai leg of the listing will be will price at 68.8 billion yuan per share, which is equivalent to $10.27. The Hong Kong listing will be around the same price, pricing at Hong Kong $80, which is the equivalent of 10.32 in US dollars. Jack Ma did come out and say that he was very glad that this was going to be listed in Asia as opposed to being listed in New York, partially due to the trade tensions between the two major powers right now. If you look at the PE ratios, we see that this will be priced at 31.4 times 2021 earnings and 24 times the 2022 forecasted earnings. This is substantially less than one of its peers, Alibaba, which is now trading at 34.3 times the trailing 12-month earnings in the Hong Kong listing. All right, 3 more things to talk about. Blackstone Real Estate. They made a big acquisition to acquire Simply Self Storage for about $1.2 billion from Brookfield Asset Management. This represents 8 million square feet across the United States of prime storage space. Frank Cohen, the head of Blackstone Real Estate, was incredibly excited about this opportunity, citing significant potential for growth through future acquisitions in a quote-unquote highly fragmented sector. Which is similar to logistics, as self-storage is a resilient sector through economic cycles, obviously like this one. And this is for reasons including low tenant turnover, minimal maintenance costs, and very stable cash flows. This deal is expected to close before the end of the year and will make Blackstone Real Estate the third biggest private owner of storage space in the US. All right. Next thing, Twilio. Twilio beat on revenue. The stock price climbed about 4% on this better than expected revenue. Again, the stock is up about 206% so far this year. So very impressive. It's been one of those counter-cyclical stocks for this recession. They reported a loss of about 117 million or 80 cents a share, which is compared to a loss of 64 cents a share the same quarter a year prior. Revenue was up a whopping 52% to 448 million US dollars as well. All right, last thing to talk about, the lira out in Turkey. They hit a new low today, which further underscored the central bank's credibility challenge. However, there are bigger geopolitical issues there as well, which have come to the surface between President Erdogan's relationships with France in particular. Obviously, they do face possible US sanctions over the purchase of a missile system from Russia. They are also engaged in territorial disputes in the Eastern Mediterranean and Caucasus. The lira has lost more than 25% this year and did surpass that $8 mark, obviously, given the way FX works. The higher that number goes, the weaker the lira gets. So as we do go above $8 and rose and fell to, I guess today it did fall to 1.7% or 8.0984 per US dollar. And so we saw this big jump just a couple weeks ago. It was at that 770 mark. So we see that big difference. And this does make it the worst performing currency in emerging markets after the Brazilian real. So definitely very weak there. We'll just definitely have to stay tuned in coming episodes. All right, everyone. Thank you so much. Look forward to seeing you tomorrow for the 21st take of Market Newsflow. Thank you so much for being with me this semester. I'm really enjoying doing this. And as always, if you have any questions, please don't hesitate to let me know. Shoot me an email, send me a text, whatever works. All right. Thank you so much and have a great night.